Over the years of investing, what I find out that it is very easy to make money one way, and it is very hard to make money another way, even though your research and your due diligence might be very good for both scenarios. If you're new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, a private membership website which is dedicated to microcap stocks which are ignored and underfollowed by the investment industry. I also wrote about 10 books on investing, one of which is available for a free download at microcapexplosions.com. I also created valueinvestinguniversity.com, which is a free resource to make you a more intelligent investor. Over the years of investing, I went through two extremes, meaning that I invested in very good companies and I invested in terrible companies. And you know about the terrible companies that I invested in because the worst companies on the planet are gold mining companies, gold and silver mining companies, or precious metals mining companies. They are the worst companies on the planet. They are everything that's bad about a business, they have. And it is amazing to see how the investment performance differs between investing in good businesses at a good price versus investing in bad businesses no matter what price. You see, stock prices of all companies fluctuate, okay? That's just the nature of the investing in the stock market. And this can be viewed as an advantage because people don't like volatility. Volatility creates emotions and it makes people do not so smart things. But when you are involved in a great business, a business that has everything for it, has a great product, great management, great profit margins, the company has recurring revenues, it's winning clients. If you get involved in those kinds of businesses and then the stock price goes down for whatever reason, whether the Fed is raising interest rates or the sell-off in all the stocks, or a company loses a client and then investors throw in the towel and sell off the stock. When you get invested in good businesses, that's a wonderful opportunity. And when you buy something at a particular price and it goes down 50% and you just patiently wait, 99 out of 100, those businesses recover in the stock price. And you are rewarded for being patient. You are rewarded for, choosing them. And I am involved in a company like this. And that's what just gave me a thought like this. I actually bought, it's not in the public channel. It's just on MCE. I was watching this company. I found it after going through like 800 companies one by one. And I found like 5, I chose 5 companies out of 800 and I ended up buying 2. So this is one of them. I absolutely love the business. I absolutely love the product that they have. And I want to buy as much as possible of this company, okay? And when I first wrote it up on MCE, the stock was at this level, okay? And I didn't have the money, I didn't have liquidity at that time, but I was thinking in my head that I want to put like $1 million into it because that's how much I want it. At the right time, I'm like, I'm going to put $1 million into it. But I thought by the time I'm going to be able to put this much money into it, the stock will probably double. Instead, the stock price got cut in half, okay? And I ended up having some liquidity at that time. So I ended up buying 1% of this company, okay? I put like $250,000 into it. And I think it will become $1 million position like I wanted it. But not because I was able to put $1 million into it, but because I think it's just a matter of time before the stock goes to the level where I thought it was originally going to go. And now, why did it decline 50%? Well, it declined 50% because, everything started selling off. And then the company lost, for the first time in its history, lost a client. So the shareholders just, threw in the towel. They just didn't want to have anything to do with the company. And I was like, I'm watching this company and I'm like, they are a leader in their own space. When they, go out and try to get new clients, 9 out of 10 times they are the winner. I mean, think about this. 9 out of 10 times they are the winner. If you do it enough times, how do you think it's going to work out? I think it's going to work out very well. So anyway, the stock goes down. I load up on it. And of course, at first, it goes even lower than what I paid for it. And then things start to go good again, apparently, because the stock just starts soaring again, right? And I'm thinking to myself, I'm like, yeah, man, this would never happen in gold mining stocks. I mean, you want to be, the stock goes down 50%, you want to be aggressive, you want to buy more, and then it goes down another 90%. It doesn't matter what you know, how much you study the company, whether you visit the company or not, whether you talk to the CEO or not. The business is so terrible, they will always find a way to mess it up. They will always find a way for the stock price to go even lower. But with a good company like this, it's like, wow, this is the difference. This is what happens when you invest in fantastic things, because the greatness of the business, 99 times out of 100 will always win out. Even if the management doesn't do everything right, the greatness of the business will win out. And people talk about a lot of times that we should make the distinction between, a great company might not be a great investment. And my response to this is, yeah, if you're only investing in NASDAQ and New York Stock Exchange, good company might not be a good investment. Why not? Because good companies rarely trade at valuations that make it a great investment. They are almost always overvalued, and you have to pay premium for that. But I guess a space where you can get both greatness and great valuation, I can only see it in microcap space. I can only see it in a small cap space, simply because there's so little competition in that space that greatness doesn't get appreciated. Because in the microcap space, whether you're looking on Canadian Stock Exchange, OTC, or TSX Venture, what do those people want? They want trash. They are attracted to trash and stories. They want to get high on pot and they're looking for gold. That's what they want. They want trash. But within those companies, about 10 to 20% of the companies on these secondary exchanges are companies that are good. Good, and some of them are great. And the investor base that is participating in that space, they don't care about greatness. And that's why in that space, you can get great businesses that turn out to be great investments. Greatness will 99 times out of 100 deliver fantastic performance. But if you don't overpay for it, it's life-changing. So my suggestion to you is, why would you not go for greatness when greatness and great investments can be together? I think this can only be delivered in the small cap and micro cap space. So take advantage of it while you can. Once you get too rich and you have too much money, then great companies and great investments might not be available to you. But for most of us, it's a long way before we graduate from that space and are forced to play in the playground that you have to sacrifice greatness and you have to go for average or below average in order for those businesses to turn into good investments.